What will the impact of the re-election of President Obama be on the housing and mortgage market?
We are looking at some key issues we need to keep our eye on, coming right up.
Happy Thanksgiving, Tampa Bay. My name is Barry Horvath, and this is Moving Forward TV, your local real estate and mortgage update.
And I am DeLynn Gaston. Thanks for joining us today on this Thanksgiving week. This morning on the show, we are going to be taking a look at, there's a few key areas that we need to keep our eye on with the president's re-election and how this is going to affect you and I in the mortgage and real estate world going forward over the next 4 years.
And ironically, during the whole campaign, the #1 crisis in this country, it wasn't even addressed.
You know, all of those ads, they were all like negative ads, but nobody addressed the real issues that we want to take a look at.
This should be, and there's obviously nobody can really be sure what impact Congress and the president's re-election will have on this housing market, but there's a few key areas that will merit us looking into it.
Right. Okay, #1 that we have to take a look at is, will DeMarco stay? Will he stay or will he go?
Who's DeMarco? Edward DeMarco. Edward DeMarco is the head of the FHFA.
Say that 3 times fast.
FHFA, FHFA, FHFA.
You really mean it,
not to be confused with FHA.
Right.
But that stands for, I'm going to have to read this, the Federal Housing Finance Agency. Edward DeMarco has been criticized highly right now, particularly by President Obama.
Right.
And for #1, for his refusal to write down any Fannie Mae or Freddie Mac loans that may be upside down.
Right, the underwater homeowners, those two don't get along. You know, Obama was trying to put some stuff in place, and Ed DeMarco basically said, no, that's not going to work in the long run. You know, you have to look at the whole financial picture going forward for the country, and that just wasn't going to work. So he said, you know.
And notably, we had a prior potential dismissal that you know about.
The person who President Obama did want to put in place of Ed DeMarco, basically after looking at everything, kind of came to the same conclusions Ed DeMarco did and said, well, that isn't going to work going forward, so I don't want that job. It's a bad job to have, you know? The guy who's like in charge of everything, you know, I wouldn't want that job.
You know what? When your boss tells you, you might want to write down some mortgages for Fannie and Freddie, you might want to do it. So here's my take on Edward DeMarco today.
Yeah. There he goes. Poor Ed, off the table. Basically, though, by taking a look at this, keeping an eye on if President Obama is going to press on to get rid of him, because he tried to get rid of him in 2010, then he laid off. So if he pushes on right now, that's going to be a key indicator that we need to kind of watch, because that means the housing, all of the housing changes that he wants to put into place are definitely going, that'll be the first one to start the ball rolling and all the changes coming up.
Listen to your boss. The next issue we need to address would be the expanded options for underwater homeowners. So we're looking at the potential, the rumor is HARP 3.0. You know, like we need another HARP, right?
I know.
So the 3.0 essentially says if you're on time, and this is just a rumor, so don't quote me on this. If you're on time, you will qualify under a Fannie Mae or Freddie Mac streamlined refinance program almost automatically, just by being on time. So even if you're underwater, you could qualify under these new guidelines.
And streamline normally means without requalifying, which may mean no bank statements, no pay stubs, no requalifying. So
just be on time.
Just be on time. The second part of the HARP 3.0 or whatever is for the non-Fannie Mae. We've told you guys many a time, there's the Fannie and Freddie loans out there, and then there's all of those hybrid programs that cropped up during 2002 to 2007, all those different types of mortgage products. Well, those people are all just kind of like hanging out there. They're not Fannie, they're not Freddie, they're just kind of like stuck. There's nothing for them right now, and that is a good part of what's going to happen. Hopefully something will come out to help these people refinance as well. They're looking at putting some strict guidelines. They will have to qualify for them, and putting it under an FHA program. #3, will the CFPB press on? Who is the CFPB, Barry?
CFPB, CFPB, CFPB. It's the Consumer Financial Protection Bureau. It's basically this regulatory agency that was put together to monitor the actions of what's going on in the mortgage industry and how people are being handled, how loans are being handled. And their big hot topic right now is to figure out what is a qualified mortgage.
You know, these were the people that were put in place to basically, with their magnifying glass. Now, I'm not saying it wasn't needed. Definitely the mortgage industry was running amok. So absolutely positively some of these regulations and stuff had to be put together, but these are the people that are making our lives crazy people. These are the people who are with their little, you know, magnifying glass and crawling places where they don't need to be crawling to check on everything.
Well, get this. Their first order of business is to determine a qualified mortgage. Well, what's a qualified mortgage? Well, basically, it's to determine whether a borrower has the ability to repay a loan.
We're not making this stuff up, people. This is what they said. They said that's their first order of business is to determine what a qualified, I don't know, I've been doing it for 30 years. I've been figuring out, does the person qualify for this mortgage or not?
Pay stubs and bank statements and tax returns? So we got a regulatory agency that's going to help determine that.
And it really does say to help determine the ability to repay the loan. That's what we've been doing for 30 years, and me, 50 years probably, determining if somebody has the ability to repay the loan or not.
50 years,
I
please.
started when I was
and the other
12.
part is they're trying to determine if people are going to be mandated to put at least a minimum of 20% down.
Right, that's another thing that they're considering, which would be a huge step backward.
Absolutely. If we start making everybody put 20% down,
no one's going to be buying houses.
No,
it's
exactly.
Just too hard.
And this is my favorite part. The Obama administration hasn't come out in favor of any particular criteria for a qualified mortgage, other than they should ensure that a borrower is able to repay the mortgage.
Duh. They should have had a V8. Number 4, the potential replacement of Fannie Mae and Freddie Mac.
It's just a matter of time. We are winding down when Fannie and Freddie will be replaced.
Again, it kind of goes back to number 1. You know, Ed DeMarco, the FHFA, is the one who oversees Fannie and Freddie. And granted, a lot of restructuring and stuff has been going on. As we all know, our guidelines have been getting stricter. Yeah. Lending is getting tighter and everything. They're saying that they're winding them down and they're going to replace them.
And the only thing we can be sure of is that they're saying that they're going to keep the 30-year fixed rate mortgages in place, which has basically been the building blocks of this country since, you know, since my grandparents bought a home, 30-year mortgages. So.
You know, and they started the whole Fannie and Freddie way back in the 30s, you know, after the Great Depression to put like safe houses in place, so to speak. And now that foundation has been rocked and they're going to replace it. Now, some people might be saying, oh, yay, replace Fannie and Freddie because they're the ones who have all of these strict rules. Well, keep in mind, you know, sometimes be careful what you wish for because
we don't know what we could be getting into.
They're going to replace it with, you know, something probably even stricter. And finally, number 5, we need to keep our eye on mortgage rates.
Yes, and although presidents have really very little control over mortgage rates, however, the Federal Reserve does. Yes. And Ben Bernanke, our best friend, right now in this environment, best friend Ben, we're going to keep him as our best friend. He's doing things like they're buying up many treasury bonds. They're buying up blocks of them right now, which is going to keep us in a low interest rate environment. In fact, predictions are we'll probably be in this low environment till at least 2015.
The government, anyway, has committed to that policy to keep these low rates for the next few years anyway. No guarantees. Not sure what's going to happen after that, but...
So any major changes in Fed policy over the next coming years is highly unlikely.
That's our show this week. Thanks so much for watching.
If you like our show, share it on Facebook, Twitter, email us. Send me a turkey. Send DeLynn a turkey.
I have one, but another one is good.
Yeah, you can never have too much turkey.
That's right.
Happy Thanksgiving to everyone. Don't forget our sponsors.
Right over here. They help us get our show out each and every week. They're a wealth of information in their field, and I know they can help you as well. Please click on their links and get their word out there as well. Again, share this show because this is a great show that people need to know information that they need to have.
And it's a great week to watch football. You thought I wasn't going to get it in.
I knew you would get it in somewhere.
There's at least 3 games, so don't forget to watch that.
We will see everybody next week. Thanks so much. We are today and every day
moving forward.
Bye-bye.